All right, cool.
All right, man. Well, thank you for being here. Sincerely, I appreciate you kind of taking the time to do this with me, and I'm excited to kind of get into some things with you.
Yeah, thank you for having me.
So, just right off the bat, I was wondering if you could kind of give a little bit of background about yourself and kind of how you started your career and what made you interested in what you do.
Sure. Yeah. So I am a analyst in residential mortgage capital markets. So what that means is essentially is just a fancy way of saying that I manage sort of the P and L for mortgages for a bank, pretty much. And so pretty much when a bank makes a loan to a home borrower, that creates risk for the bank. And so my job is to sort of manage the hedge side of that and manage the P&L for those mortgages. Um, some background on how I got into that. In high school and sort of throughout college, I was really involved in sort of landscaping and also just sort of real estate in general. And so that kind of spurred my interest in learning about the finance side of it. I was a finance major throughout college, and then, you know, just really just kind of applied for any kind of finance, real estate related roles, and just ended up there and just kind of stuck with it.
Yeah, that's fascinating. So how do you make what's your impression of the current market right now, real estate wise? I have a couple buddies who are pretty involved in it. Actually, I have a friend that does from what I understand pretty much exactly what you do. And they've been a little worried about real estate recently. So what's your take on the situation right now? And just for context, it's November 10th, 2022.
Yeah. So my point of view is that it's disastrous. No, but seriously, I started in May 2020, which is really just like sort of the start of the pandemic, pretty much. And when rates really started to, there was that initial nuke, and then everything sort of came back once the Fed said, "Hey, actually, we're just gonna buy everything forever now."
Yeah.
Um, and so everything started to go crazy right around then, and that's when the entire country decided that they were going to buy homes and refinance. And so you had a tremendous boom for, all of 2020 pretty much, and then all through really the end of 2021 into like the beginning of 2022. But then, once the Fed decided, well, actually, we're not going to buy everything forever. We're actually going to tighten, and you guys can just, get fucked. That's when
Yeah.
everybody decided, well, actually, these rates are really way too high. And so now I think it's a pretty bad environment just for real estate, because you've had so much activity for the past 2 years that so many people are refinanced or just sort of out of the market, and that there's really not much. There's a big demand for homes just kind of in general, always, um, for
Yeah.
new homes, that is. And there's no real supply just due to inflationary issues. So you've got a lot of people that might want to leave their homes, but there's no new supply. So it's just they're forced to buy off these people that have just refinanced, and those people aren't really going to sell unless it's for an insanely high price. Because if you sell now, you're going to have to take that 7% mortgage, and nobody wants to do that when you just locked in 3%.
Right.
Um, so it's just a bad situation overall. If you want to buy a house, you're in a tough spot. If you can hold out for a little bit, I think you're probably a little bit better off. But either way, it's just it is rough.
Yeah. So do you think we're going to start to see home prices go down? I mean, maybe it's just where I'm living, but you know, we haven't really seen any sort of reduction in the cost. So I'm kind of wondering, is the asset price itself going to start to go down, or how do you think it's going to play out over, let's say, the next year or so?
Yeah, that's a good question. So over the next year,
Yeah, let's say
um,
the next year, or whatever, the medium to short to, or medium to, yeah, I guess short term, yeah, a year, 5 years, something like that.
okay. It's I wish I could really give you some good news
Yeah.
and tell you that and tell you that prices are going to come down, but um you really got to think uh I guess it depends on where you are, and it also depends on, I think there's always going to be little deals here and there, like if SBF ends up having to sell whatever property he owns,
Yeah.
and
Yeah.
people like him end up having to sell property, there's always those little opportunities there when people are sort of forced to sell. But
Hmm.
in terms of the broader market, it does become a lot more difficult, I think, because of sort of that supply chain shock. So the price to build a home has also gone up quite a bit.
Okay.
Um, and also just dealing with a shortage of materials. You think of like the labor costs increasing, the supply of materials increasing. I know there was a big glass shortage throughout most of 2021 where it was really hard to get windows.
Hmm.
So it's just like little things like that that are going to delay and slow down lots of building. So you're
Hmm.
not really going to see the supply meeting the demand there. And then on the other hand, you know, everybody's been exposed to these low rates for so long that everybody's sort of getting sticker shock when it
Yeah.
comes to, oh, my parents, my friends, they all just bought homes last year and rates were, 3.5%. Now I'm here and it's 7.5. What's going on here? Like, this is absurd. Like, I won't pay this.
Hmm.
So I'd like to say that home prices will go down a lot, and you might start to see that as people are forced to move if we do enter a recession. So there
Hmm.
is, like, that's really would be the main driver, would be, the idea that people have moved into expensive homes and that they can't afford that and they're going to have to downsize. But I don't know if there's going to be enough of that to really move the overall market, unfortunately.
Okay. Yeah. So I'm gonna rent forever is what you're saying.
Yeah, no, it is really a tough, maybe Missouri. I've
Oh man, that's pretty far from where I'm at right
no,
now.
that's sort of Missouri to me is kind of hell. So I think if I ever have to go there, shit has really hit the fan.
Yeah, and you know, I've got a friend who's looking at getting a spot here relatively soon, and he's pretty convinced that, his philosophy is you marry the property, you date the rate. That's what he
Yep.
says. And so, but how long, is it gonna be? Are we just gonna, stay? Because it seems, I mean, you would know better than me, but it seems like we've almost kind of reached a ceiling in how high we can go in terms of rates. But how long are we going to be here, or do you think we can still go higher as well?
That is a really good question. I think we can go a little bit higher. I think we could go a little bit higher just because I think the Fed might still say, yeah, we want to tighten a little bit more to really kill inflation. Like the rates are all really driven by the Fed at the end of the day.
Yeah.
Um, if the Fed decides that they really want to push rates to 5%, then we'll probably end up with mortgages in the 8% range. For
Wow.
how long that lasts, it's really hard to say. I think the Fed would like to keep it there for a good amount of time. Um, Whether they will be able to, if we really do go into a recession or if the war in Ukraine starts to really take a turn for the worse, they might be forced to lower rates again, just to prevent some sort of
Yeah.
cataclysmic reaction there.
Right.
So I think I think 2023 is shaping up to be a pretty rough year just in general.
Mm-hmm.
Um, because I think the other side of that is sort of the business front when you think of the rate environment. Um, so the Fed passes down this rate pretty much to the banks, and then the banks go out and lend money, and funds and business owners are using those to pretty much support their businesses or to buy businesses. Um, and pretty
Mm-hmm.
much what's going to happen is that debt is going to get very expensive. The way that I'm sort of thinking about it is that debt is going to get very expensive, and then you know businesses are going to have to cut back on debt, and then you're going to see layoffs as those companies and those funds start to say, all right, well, this debt payment's going to be more expensive, so either we got to cut our costs or somehow grow revenues in an environment that's very challenging. So the obvious solution would be to cut tons of jobs.
Mm-hmm.
um, so I think that's sort of the direction that we're heading. So I think right now, lots of people are loading up on cash. They're preparing for a recession. So the sort of pushback to that is, well, if everybody's in cash, well, then it's going to be fine. um, because everybody's probably going to be wrong.
Yeah.
Um, but I just don't know if I just don't know if everybody is going to be wrong. I think we're just going to see it in slow motion, because I think right now rates are still low enough that businesses, they're kind of preparing, they're kind of crossing their fingers and hoping that rates are just going to go back down. But if they don't, then things are going to get pretty difficult pretty quick. So
Yeah.
it's
And
it's hard for me to say which way we're going to go.
yeah.
It depends, I think, largely on inflation. I think if costs can get under control, it'll be
Mm-hmm.
shorter. But if we continue to see that costs are rising, then that's just going to be the impetus to continue tightening for longer, and then things are just going to be more painful.
Yeah. And it seems like we have a fair bit of unwinding to do, and still a pretty big inflation problem to correct. Now, I did want to ask, when you're thinking about this stuff, do you study the history of this, or how do you kind of um get a framework on it that you think is reasonable?
When you say the history, what do you
Like
mean?
of inflation and the debt cycles, and raising and lowering of rates in response to the printing of money. And I'm just wondering, like, how do you gain such an understanding of it? Because I mean, you're talking about it very eloquently, and it's making a lot of sense. But for me, I know almost nothing about it. So I'm just wondering, how do you gain that understanding?
I think to sort of, that's a good question. I think it's just sort of being exposed to the market sort of daily as just a part of my job. The my boss, he has been in the markets, I think, for 30 years or so. So he has a lot of knowledge that he's able to sort of impart on me just sort of firsthand.
Hmm.
When he worked pretty much through the Great Recession and was sort of able to sort of say what happened. It's also just I wouldn't say the history necessarily, because when I think history, I think like 80s level inflation, and
Yeah.
so it's less of a history lesson. And I would say looking at the past 20 years is a pretty good indicator, and you're able to see. And it's also just keeping note of what the Fed is doing, and sort of what the different Fed governors are thinking and saying, and sort of judging off of that. Um, and I think something that helps keep it all sort of in line for me is really just thinking about how things interact. It's really easy to make the markets like a really confusing place. where,
Yeah.
you know, it's if you're just sitting there like staring at an order book or something like that, and it's just lights flashing on a screen, you know, red and green candles.
Yeah.
It can all seem like a pretty, you know, bizarre environment, and really alien. But I think if you kind of, you know, take a step back from that and you think about it, you know, big picture, like what is really going on in the world? You know, there are people, you know, it's pretty much just supply and demand, and, you know, what are people after? And, you know, how much is that going to cost? And sort of how is that going to sort of um, drive the markets?
Yeah. And do you give any credence, or I don't know if credence is the right word, but credit, I guess, maybe, or to the theory of people are going to be rushing into the dollar as these smaller currencies, as they start to collapse, people come rushing into the dollar, and that's why we've seen so much strength in the dollar despite inflation. And then eventually, you know, the US dollar is going to collapse or fall as well. You know, the kind of theory I'm talking about, that, you know, a lot of people have been proposing recently.
I have. So tell me more about that. The theory
Well, it's
behind the
just
dollar
kind of
crash.
like you know, we see Japan and various other countries, you know, their currencies are becoming super weak. And I
Mhm.
guess yeah, they're becoming super weak, and people are kind of rushing into the dollar as a safe place, which is boosting the dollar, and making it stronger, even though we're inflating it. And supposedly, you know, it's supposed to be, I mean, we're both in crypto, and supposedly, you know, we're ruining the dollar with all this inflation, but, you know, it's showing real signs of strength. So I'm just wondering, you know, do you think that people are gonna, you know, rush to the dollar as their currencies get weaker and weaker? Say, for example, the yen, the Japanese yen, and then once there's a bunch of people in the dollar, do you think that long term the dollar can sustain itself?
Oh, that is a good question. Will the will the dollar be able to sustain itself?
Yeah.
Um,
Yeah.
gosh,
I mean,
I'd like to
we're
hope
doing what
so.
we can. Yeah, we're doing what we can
Yeah,
right now.
I think it's always such a fluid situation, and I sort of hesitate, um, to, you know, to speculate on currencies too much because it's really not my specialty.
Yeah.
But if I had to guess, and I'm not too familiar with emerging markets,
Hmm.
um, but, you know, a lot of these countries, you know, they are weaker currencies. And so I don't think it's, you know, when you hear, about sort of people applying, like piling into the dollar, I'm not sure it's, you know, your average, you know, Indian or Argentinian, citizen that's really buying US dollars. I think you're probably going to see a lot of governments, as, you know, those US Treasury yields start to become more attractive.
Hmm.
You know, they do get that dollar safety. And then in addition, they also get, you know, the benefit of those sort of higher yields in recent times. And I think, I'm not too familiar, but I think that the Chinese central banks and the European central banks, they have tightened, but not as fast or as aggressively. And I believe China is actually, um, in a very tough spot right now because Chinese property values are starting to fall. I don't know if you've ever heard of, like Evergrande or these large sort
Yeah.
of property developers. Yeah.
Hmm.
So if you're familiar at all with like the Chinese property market, like those, there are really large developers that are really starting to hurt and sort of fall through. Um, and as that happens, those developers are starting to take some Chinese banks down with them, which just threatens to make a whole mess of a situation over there. So,
Yeah.
you know, how aggressive can China be when it comes to tightening? You know, they may be forced to sort of loosen their monetary policy, which would, you know, the tighter your policy is going to be, the stronger your currency is going to be, pretty much. Is sort of how I think about that scenario. So
Hmm.
if, you know, the Europeans and the Chinese are a lot looser than us, that's going to draw more, you know, more currency to the US dollar. And so that's going to put, you know, demand for the dollar in a lot stronger
Hmm.
position.
Hmm.
I think over time, I mean, you would sort of naturally see that kind of ebb and flow as policy changes over time. Whether the dollar can continue um, and support itself, I think depends largely on the U.S. economy and its ability to sort of maintain itself as a world power. I think there is a lot of it's honestly really, really hard to say because, you know, China is such a manufacturing hub now that I think it does have the power to become sort of that number one superpower. And, you know, who knows what happens then. But I think China's also in a really sort of fragile state. So it's really hard to say, you know, who will come out on top at this point.
Yeah, I think that makes a lot of sense.
But yeah, I think any currency I think is gonna have its day. I mean, it's all fiat, you know, it's all made
Yeah,
up.
yeah.
Um,
It's all just,
so I
it's kind
think,
of like our, you know, magic internet coins as well.
oh yeah, I mean, it's pretty much whoever is the strongest, that's what's gonna be the
Hmm.
best. So
Okay.
that's
Okay.
sort of the way that I think about it from a currency perspective.
Yeah. And so let me ask you this to talk a little bit about crypto, and I'm sure we'll get into all of the FTX stuff as well, but this kind of plays into what we were talking about. So um, how would you kind of look at the monetary policy of Bitcoin um, versus the Fed, and
Yeah. So when
you
you
know,
say the monetary policy of Bitcoin, I guess
I
what are you
guess the you know, the halvings and the inflation, and
okay.
I guess what you know, where my mind goes when I think about that question is the predictability of it. um you know, because there's no, I mean, unless there's a fork or something like that, there's no meeting that needs to be put in place to kind of tell us what's going to happen with the inflation of Bitcoin over the next 100 years or so. So um, I guess I'm just wondering, you know, uh, is that kind of what got you interested in crypto, or what did get you interested in crypto?
Oh, good question. I'll say I think it depends really on the just to answer the monetary policy question.
Yeah.
I think it really I think there's it's hard to say if one is better than the other. Really, I think they should probably both sort of coexist.
Mm,
Um, I think there are cases where, you know, the Fed has the ability to be really flexible, and I think that can be beneficial in sort of providing that stability.
mm-hmm,
Um, but then there is sort of the worry of putting all of that sort of trust into a central authority. And, you know, what if they get it wrong? Like, in sort of retrospect, we can say 2020 was a disaster in terms of how much money we printed. And so, you know, Bitcoin is obviously superior in that scenario. But
mm,
it is really difficult to say because in some cases, you know, you'd like to think that the policy of, you know, Bitcoin is a little bit more stable. But then when you look at the price volatility, you know, it can be that can sort of challenge it a little bit, maybe.
mm-hmm,
I think in the long run, I think decentralized is probably the way to go. I think centralization does offer some advantages, and I think that there is a need for it, and I think there will be a need for it just in terms of speed, I guess, for lack of a
mm-hmm.
better word.
Yeah.
Um, but I think, you know, you want there to sort of be that decentralized option. Um, so that's
Yeah.
sort of, I think they will have to coexist in the future. I don't think it will be, you know, necessarily all decentralized. I think that could also pose its own issues.
I think that's a really good answer, and also something I'm slowly coming to the conclusion of as well, because I'm admittedly a pretty idealistic guy. So when I got into crypto, you know, I was very much thinking it was 100% the way to go, but the way that you're putting it makes a lot of sense to me, and I think some sort of hybrid of the both, like just like anything in life, I guess, you know, nothing is really ever black or white. It's just some shade of gray, and it's probably the same with this, and I think to have um a way for people to opt out of certain centralized currencies is probably a good thing. But yeah, like you're
Hmm.
saying, you know, to have some level of control where you can make things happen quickly, I think is probably a positive. I mean, we've seen that in different nation states with, you know, the ability to move quickly is definitely an advantage in certain situations. So how did you get into crypto though? Because that's kind of where we started exchanging messages, is on crypto Twitter.
Yeah. So that's a, I wish I could tell you, you know, I was there 2009 and, you know, bought 10,000 Bitcoin at, you know, a cent. But no, honestly, I have, I've only actually purchased, like I only actually started buying crypto like 1 or 2 years ago at this point now.
Hmm.
Um, really, it had been sort of on the peripheral. You know, I think I saw it honestly as early as like 2012. But at that point, it was like, you know, coming down from all-time highs, and I kind of looked at it and I was like, oh, what? Like, first of all, I was a kid back in like
Yeah.
2012, so it's like I looked at it and I was like, all right, you know, I was never like a internet savvy person, so I was like, all right, first of all, don't really understand what this is, um, and it looks like the price is just been really beaten down, so this looks kind of worthless.
Yeah.
Then in college, I first learned about Bitcoin when somebody I was friends with proposed using the school's computer servers to mine Bitcoin. I
Mm.
thought, you know, wow, that sounds like a really interesting idea. Let me check it out again. But by that time, it was also like 2017, 2018, and
Hmm.
so it had again come down from a really you know, all-time
Yeah.
high. And I was like, wow, this is you know, tough, but let me sort of learn about this technology. And I learned about you know, what Bitcoin is, sort of the applications of it. I thought it was a really interesting concept. You know, the
Hmm.
idea of a decentralized ledger that just kind of tells you, you know, all right, this is where it is, and it's, you know, practically incorruptible.
Hmm.
Um, and the idea seemed really interesting to me, but you know, honestly, I couldn't see the use case for myself. I was never really like a die hard worried about the government taking my money. um, I was not a Silk Road user or anything like that,
Hmm.
so there was no real like need for me to go out and buy Bitcoin. And looking at the price action, I was just like, oh man, this is you know, this is tough.
Yeah.
So it wasn't really until I think, you know, 2020, truthfully, that I even learned about Ethereum. And I think that is, you know, Ethereum is really, I'm not an ETH maxi, but
Hmm.
it's really sort of my, like what I believe in, what I believe the applications can be, because I like the idea of, you know, you can build applications on a cryptocurrency and that it can have some use case, you know, beside, I think the peer-to-peer, you know, being able to exchange currency without, you know, having to worry about a third party is a really revolutionary idea, and I think it's really important.
Yeah.
To me, it didn't, like, I didn't really have any practical application for it. so I was more attracted to sort of the community aspect of Ethereum and sort of that idea that you can build entire sort of companies and protocols on this blockchain, and
Hmm.
that can have some sort of, practical application in the real world.
Yeah.
That's sort of how I got into it.
Yeah, I was pretty similar to you, even on timelines as well. But yeah, Ethereum to me really was what made me think, okay, I'm going to start dedicating a significant amount of my time to reading and learning about this. And it is pretty interesting to have financial instruments on a blockchain where you can do all this different trading. And even now, you can trade futures and things like that, without having to really trust anyone. I guess that's kind of debatable at this point, but
Really, trust absolutely no one at this point.
yeah. So what do you make of this whole thing with FTX? So a little bit of background, I guess. So um it sounds like they were just taking deposits from people and using it to backstop Alameda because Alameda was losing a bunch of money, or is that kind of what you were um getting from this whole situation, or
Yeah, it's funny because you can probably, I'm sure in the coming weeks we'll learn a lot more about it. So it'll be funny to go back and listen to this, and whatever theories we offer right now will probably be wildly off.
yeah.
Um, so what I'm sort of guessing from sort of the what I've picked out of crypto Twitter and all sort of the nonsense that has come out so far is that, like you said, I think so. Alameda was, huge market maker. They were probably making the market for Luna, and so they were probably really exposed when that happened,
Yeah.
when that whole thing went down. So not really clear how much they lost there, um, but one can sort of guess that it was a lot.
Hmm.
Um, and what it sounds like is like what you said is it seems like, they lost a lot of money. Then not really sure of the specifics, but it seems like they were definitely playing with client funds, which is always always a bad idea. I mean, that was the end
Yeah.
of Quadriga, right?
Hmm.
You think, oh look, I've got 2 billion in client funds just sitting there. They don't need it. Let me just
Yeah.
let me just mess around with it a little bit,
Right.
which is don't do that. Anything but that. So it sounds like Sam said, all right, Alameda, all right, Caroline and Sam, go out and use this, shore up, get some good directional trades in there. And so they did not.
Yep.
Evidently they were unable to revenge trade it all back.
Hmm.
And so it sounds like they might have just gone and blown it up. So it seems like, they probably had a lot of loans as well, backed by FTT. Um,
Yeah.
and so it sounds like they took a lot of losses on Sol and a lot of losses on FTT. And I'm sure that's just eating a hole in their P&L. And it sounds like, yeah, those client funds there, well, they're not client funds anymore.
Yeah, they're yeah, really. And do you think people will the clients will eventually be made whole by someone, or do you think that that's going to be some sort of class action lawsuit down the line?
Yeah, I mean, it's really hard to say without without, knowing all of the details right now.
Right. Yeah.
Everything does seem so murky. It seems like, oh, they're trying to do, a $10 billion raise. So
Yeah.
maybe if they are able to raise $10 billion in an unspecified time frame, everything will just go back to normal. That seems unlikely. I don't
Right.
really know what's going on with Justin Sun. I don't really understand the whole Tron hookup that they're doing right
Yeah.
now with that. credit facility. I truthfully have no idea how any of that works.
That part of it just that seemed so wrong to me. To I mean, and I'm probably wrong, right? Myself, I probably don't have the proper view on this, but it just seems like, Justin Sun is being opportunistic and saying, okay, well, we'll make you whole on Huobi, if you're a Tron holder. And then they're pumping the price of these tokens, and I guess FTX is agreeing to do this, and it just does not make any sense to me. And the way, like, their lack of communication, has really screwed a lot of people over, because people are just YOLOing these funds that they have in there, because they think they're not going to get them back. And then we saw today that they're supposedly letting some deposits out, or withdrawals happen. So I don't know. I don't see how this doesn't end up in a huge regulatory mess for everybody involved. And the people who are going to the holders of a lot of these tokens are going to be the ones that suffer. I mean, it's super sad to me to see, as I'm sure you've been seeing, all these stories of people that had a bunch of money in FTX, and now they're
no, I mean, it's unreal, because I think a lot of, I mean, it's really, it's, to me, there's really, the top three. I'm not really familiar with a lot of the sort of smaller international exchanges. To me, in my mind, it's like the main players are, Binance in Asia, which is just absolutely unbelievably massive.
Yeah.
Then FTX is, mostly for Europeans and for Americans who are using VPNs and getting offshore. And then there's like Coinbase for your average American who doesn't really care for leverage or anything like that.
Yeah.
So that's sort of the picture in my mind. And so, yeah, I mean, it's really just, it's disastrous. Because you really are seeing people with millions of dollars, because this isn't BitConnect.
Right.
Or at least it wasn't until it became BitConnect.
Right.
But it really is just a disaster. And I mean, it's almost worse than like a Mt. Gox thing, because it's not like it was hacked or anything. It's just like gross negligence. So in that respect, it's almost worse because it was preventable.
Right. Yeah.
It's not like this is like, oh, some malicious hackers came in and tore it all down. It's like, oh no, we created a bad platform that, we created Luna that blew up this giant exchange.
Yeah.
So it's almost, worse in that respect. And it's really, really tough, because, like, how do you restore faith, in that client experience now? How can anybody, again, make a deposit to FTX thinking that their funds are really going to be safe? So
yeah,
it's probably the end for FTX. I don't know how they really get that that sort of sense of security back.
Yeah, I would agree with you there that it's probably the end of FTX. I mean, I certainly wouldn't touch it with a 10-foot pole. Now, do you think that so I saw something where they were talking about, all this leverage that was in the market with 3AC and Alameda, and that boosted the prices so high. Do you think it's going to take a long time? I mean, I know, no one here, if we could predict where the price is going to go, then that'd be great, and we would be very wealthy gentlemen. But do you do you think that it's going to be a long, long while before we get back up to those crazy 69K prices that seem like, it took a lot of leverage to get us there, right?
Oh yeah, yeah. No, I think even if FTX hadn't gone and just put a $10 billion hole in the market just for fun, I think just the general macro environment, with that sort of with the whole sort of rate environment that we touched on earlier, with
Hmm.
that looming in the background, it's just it's we were bound to not have a good time in 2023. Um, and this is really just going to made it 10 times worse, you
Right.
know, because in addition to destroying consumer confidence in one of the largest exchanges on the planet, um, you know, SBF said, "Oh yeah, Alameda will no longer be trading." They were, a hugely instrumental market maker. I mean, I don't know what the impact will have, but I can tell
Hmm.
you it will not be positive for liquidity.
Right.
So I don't think 2023 was ever going to be a fun time, and now they've just gone and just made it less fun.
Yeah, and crypto's really never seen a macro environment like this before. So,
Yeah,
and and it's um
no, that's right. Because I mean, Bitcoin 2009, even then,
yeah,
it's all just been flat. I think they tried to raise rates in 2019, and then that's also when the space got nuked.
yep.
So it definitely seems like we are heading back to Nuketown.
Yeah, I admittedly sold off the rest of some of my tokens today into some stable coins just because you know I knew it was going to be bad. Like you were saying, I knew 2023 wasn't going to be a good year, but this whole thing with SBF and FTX, it just really was disheartening for me, honestly, and kind of made me feel like, I was watching. I don't know if you ever watched the Up Only stream,
Oh yeah.
but you know, they were on there, they were talking about the FTX debacle, and they had on like Martin Shkreli,
I
Do
saw that was
Kwon.
crazy. I saw Do Kwon there for like a minute. I caught the end of that. That was
Yeah, and I was just thinking like, I'm dedicating all my time to this space, and all my time where I'm not at work, I guess, to this space, and these people are in a weird way like champions of it. Like people still really, really respect Doe, and they respect Martin Shkreli. And that's not to say, I mean, I'm not here to be to say someone is bad or good. I'm just thinking like, is everything gonna be a scam that's not completely
that is
decentralized?
yeah, no, that's kind of where my mind is at now. I think you know, really I think though there's like five people on all of crypto Twitter that I really sort of have any respect for. I think like Kobe is probably like one of them.
Yep.
Um, but yeah, no, I really think like the space is like, you know, people like to think of it as like the wild west, like no laws, people are just out here doing their own thing. And it's like, it at the end of the day, it is. And in like all the worst ways, like
Yeah.
it's pretty much just like everybody out here is just trying to kill you and take your money. That's, that's sort of the way that I think at least the way that I am kind of thinking about it now.
Yeah. And I think that's probably a good, or maybe not good, because in a perfect world it wouldn't be that way, but I think it's a wise framework to treat crypto going forward. And you know, it's not. I got into it at the beginning of the most recent bull run. Got into it in the sense I had kind of similar to you. I heard about it in maybe 2015 and didn't really think much of it. Looked at it a little bit and was like, wow, this is really confusing. But you know, I started buying crypto at the beginning of this bull run, and I was so used to making just to, you know, printing cash pretty much. And whether
Yeah.
it was, you know, you go into NFTs and it's almost like hard not to make money. And then, you know, now it's like I'm losing a considerable amount of money. And these past couple days, I've been, you know, when we nuked down on this FTX news, I lost a fair bit, and I was just like, okay, I'm gonna go in stables and just reevaluate kind of everything, and reevaluate my entire you know, thought process on the space, because I was getting pretty out there and almost just kind of nonchalantly throwing money into certain projects without really verifying. And
Oh yeah. I think at the peak of it, I think I even threw money into Anubis DAO of all projects.
yeah.
That's how degenerate I was in this space.
Yeah, did you succumb to a little bit of that degeneracy at the top, huh?
Oh yeah, no, because I was in in like September, like right before the peak, and I was like, wow, this is so easy. You know, there's forks popping up left and right. Like
Yep.
you're just yeah, oh yeah, cool. You know, 2,000% a year. That seems definitely not a scam.
That's sustainable.
Easy, right?
So do you is that ever going to happen again? I mean, maybe that kind of sounds like a bottom a bottomy thing to say, like, is that ever going to happen again? But
Oh,
you know,
I'm sure. I mean, people like to compare, you know, like you'll see it, and you've probably seen it all over. You know, crypto is, you know, the tulip mania. You know,
yeah,
and I don't think Bitcoin and I don't think Ether are really tulip mania. It's really the projects. Like every single day, a dozen ohm forks pop up.
right.
Like that is those are the tulips. Though that's really the
Mm,
nonsense. It's like
mm,
the everyday, like in 2018 when it was just like ICO scam after ICO scam. It's like those, like the underlying technology is never going to be, you know, sure they might blow it up and it might become a bubble and whatever, that might pop fine. But it's really like the applications that they're used for are really, so I think we'll probably get back. Don't worry, there will be more Ponzi's to invest in.
that that's some of the better advice I've heard in a while, and that's honestly a great take. I think that the applications are actually the tulips. That's interesting. I'd never really thought about it that way before, but I think you're right. Now, do you think that there's any sort of areas? What areas do you think like get you excited about use? You know, not projects. I mean, feel free to shill some projects if you want, but just like in terms of use cases for, let's say, Ethereum. You know, what do you think is going to be, you know, the primary use cases for it in the long run?
Yeah, that's a good question. I think honestly, there's not. I mean, I like GMX. That's not really a shill. I just like that as a you know, the ability to use leverage, and I am terrible with leverage, and I should really stop. But I like it because you know, it's one of the few like protocols that'll let me use leverage in the U.S. and I don't have to, you know, use a VPN or anything like that. But
Yep.
that's really the only like DeFi protocol. I really do like the DeFi space, and I think
Hmm.
it does have a lot of potential.
Yeah.
Um, like even I think the ohm model could have worked, and I think it could work sort of as a way, almost as a community directed hedge fund. That was
Yeah.
never really their intention, so it never really went that way. But I think the way that they designed the sort of the tokenomics there, I think that would have been really exciting to see. I think DeFi in general is really cool because it lets anybody with internet access participate in a sort of global, really they have access to any sort of level of finance that they want.
Right.
Versus, if you want to take your dollars down to JP Morgan, they'll say, "Oh, sorry, kid, you're too poor for this. We need at least 50 million or
Right.
something like that." So it's
Right.
like that level of restriction, for your own safety, I think is kind of lame. Um,
Hmm.
so I think that ability to open it up to anybody is really fascinating. Another aspect of it, I do think NFTs will be really, really cool in the future. Not necessarily, I mean, yes, from an art perspective, um, in the ability that, as a music artist or even just, a regular artist, you're able to collect royalties. I think sort of from like a, even from like a ticket selling perspective, I think that has interesting applications where it's like if you're a musical artist and you want to sell tickets, it won't just be instantly scalped because you can put, a royalty fee on it, such that,
Hmm.
if you do end up reselling it, I'm not going to buy this ticket for 50 and resell it for 500 and, make that. So I think that
Right.
could really help, not even artists, but also just like brands and stuff, like the
Hmm.
sneaker kind of market where there's like any sort of like luxury where there's a really large sort of secondary like reselling market. I think that's
Yeah.
where NFTs could really help. Um, and then also I think like the blockchain in general, like just basic blockchain technology, will be really helpful for payments and for underwriting loans. Because like right now, if you want to get a loan, you go down to the bank, you tell them you're like, hey, I make this much money, I'd like a little bit more money, and they spend 2 months figuring out whether you're lying to them or not.
Yeah.
So if the blockchain technology was at a point where the banks have their own private chain, and all the payments that you make are on that chain, or just any chain in general. I mean, it can be Ethereum, it can be Polygon, it can be really
Hmm.
just it could be something new. I mean, who knows?
Yeah.
But the ability to say to like have a verified transaction list, this guy pays his rent, this guy makes this much money, et cetera, et cetera.
Hmm.
Maybe that part becomes a little bit more big brothery almost. But just the ability to verify that this is a guy who has a legitimate history. We have it all right here. It's cryptographically, it's encrypted, it's safe. We know that these are not made up transactions. We know this guy's legit. Then it no longer takes a month to underwrite loans. It takes a day maybe,
Right.
um, if something's broken. So I think the ability to really have, and it also it makes that loan a lot less risky because they're able to say this is all true. We know exactly the kind of person we're dealing with. So I think that application, um, within limits, because like I said, like it can become kind of big brothery pretty quickly. So I think there's probably going to have to be some sort of privacy fight there. But I think the
Yeah.
idea of it is really intriguing.
Yeah. I think at least for the privacy aspect, zero knowledge proofs might play a big role in that. So where you can, verify that you qualify for a loan without giving your financial information to the bank, but you can you know verify through zero knowledge proofs your income and how much money you make in your payment history and your credit. And I think that there's some potential there as well in the insurance industry, which is what I do. So I'm thinking about that a good amount and thinking about how we can streamline the process of insurance and making it easier for people to get approved or disapproved. And while maintaining privacy, which I think is an important part of that. This has been, a really, really insightful podcast, man. I really appreciate you sharing all your knowledge. You're insanely knowledgeable about a lot of stuff, honestly. And I'm just so grateful that you've, taken the time out of your day to do this. Now, I do have one more question for you. I'm kind of, I'm just starting out with this podcast thing, so I'm trying to kind of think about if I want like an ending question or something like that. And I think maybe my ending question could be something like, do you have any sort of life advice for me, or anyone listening that's kind of stuck with you and that you've found useful in your life?
Yeah, so I think, gosh, it's a really hard question. I think the general gist of it is probably really just, I don't know how to make it sound any less cliche, but really just learn something new every day. I really
Yeah.
think that incremental improvement is, really the way to sort of live life. Always strive for sort of that personal growth. Find something that you really care about. Like if it's crypto, find out ways to really, get better and more knowledgeable about the space. But really pick, what you care about, and then really cling on to that and really learn and sort of get better. So whether it's crypto or, you know, physical health or something like that, whatever
Yeah.
you're really into, just focus on getting better at that.
Yeah.
Um, that's really the advice. I don't know, read Aristotle. I'm a big Aristotle fan.
Yeah, that's great advice, man. That's excellent. So I just, thank you again. And
Yeah, thank you for having me.
I really appreciate it, man. This was awesome.
Yeah, thanks again.
All right. Cheers.
All right, take care.